To be honest with you, I wear quite a lot of suits, and today is the one day I'm not wearing a suit.
Okay, so we are now live on YouTube. I think we should be live on YouTube. Cool. And then if Dom, if you make us live from the main cam. Okay, go on, join it now. Do it from there. Press start meeting. Let's see what happens. Let me make Keisha co-host just in case. Oh, there we go. Make co-host. Yeah. Oh, everyone's coming in now. And then Arisha. Okay, so you need to switch camera, Dom. Camera, Dom. Dom's like, it's my show.
I don't know how to like flip it. Okay.
Yeah, you got it.
Oh yeah, that's powerful. Oh, we look like, do you know who we look like? EYL.
That's great.
We might have to do it like this more often. The desk is a bit messy.
Dom, I think Dom might have to be the audio as well then.
Yeah. Let's just ask everyone, because how is the audio, everybody?
No, mute your mic first, bro.
Me mute mine?
Yeah. And
oh
no. How about now?
That's fine.
Yeah, the audio's fine.
Audio's fine.
Oh my days, this is the new show.
Hold on, can you turn it up to full volume on the phone?
Yeah. This is full volume.
Oh, that's good.
So it might be a bit quiet.
Can you guys speak back to us real quick? Hello?
Yeah, hi there.
Perfect. It works fine.
Cool.
Okay with that.
I like this setup better than the old one.
Yeah, shut the window. That's it. This is a new setup. I like it a lot.
We just gotta make sure that you know. Okay, cool.
Perfect. Okay, cool.
Okay, cool. Let me just send out the text message to all the latecomers. All right, in the broadcast list. You get this. Oh no! This is why you can't say it up on here yet, because I haven't sent out the mass message to everybody. Right, hang on a minute. Let's just bear with us a second, guys. On this end, we are gonna go off on the video a second. Turn on the mic. Boom. Okay, let's go. So thank you very much, everybody, for bearing with us. You are here in another fantastic episode of The Game, presented to you by none other than Blockchain Sensei. You can't see that right now, anyway. Sorry about that. Those of you watching on YouTube, those of you watching in playback anywhere, it's The Game. We appreciate you for attending today's episode of The Game. We are going to be going deep into what is happening in the markets today. It's going to be a big technical analysis one today, and a bit of fundamentals. We are going to go and have a real macro look at what the hell is going on and what we can expect to happen. And we're going to analyze some of the feedback from none other than Jamie Dimon, the CEO of JP Morgan. Okay, so some unknown reason, my ability to share my screen is
Is it because this is the admin?
As the host.
Yeah, as the host. So that's weird.
I think I'm the
Let me
host because I
reclaim
just
host.
admitted people.
That is sick.
I've just reclaimed host.
That is crazy. You just fought yourself to be a host.
It is officially the Matrix.
Right.
Okay, so let's go disclaimer. So we know the disclaimer, guys. So all content is for education, information, and entertainment purposes only, and should not be considered as investment advice or a recommendation to buy, sell, hold any assets or place any trades, because we do not know what we are talking about, because we are edutainers, not entertain. No, not edu. No, we're basically not financial advisors. That's what we are not, definitely. So it's been a long day.
Monday is the craziest day of the week. So
We've written out like 3 development proposals, like 6 legal contracts. It's been a crazy day.
yeah.
So please do your own research. Our content is intended and should only be used for informational use only.
Yeah.
It's very important to do your own analysis before making any investments, which should be based on your own individual circumstances. You should always take independent professional advice from a professional advisor, and I'm not a professional advisor. Are you a professional advisor? No. Dom, are you a professional advisor? No. Anybody on this call a professional financial advisor?
You go to show that there's something to be said about.
Everyone to forever hold their peace if no one is. Sorry about that thing. I'm just gonna have to mark there. So as well as that, it's important that you research and verify all information you may find on our show, because we don't want you to sue us because you were like, oh, I saw it on your show, so I decided to invest all of my life savings and then it went down. Please don't do that. That you wish to rely upon, whether you wish to make an investment decision or otherwise, because if you didn't know, all investments actually come with a thing called
Risk. Be careful, guys.
So please do your research.
We're in a very early stage and early space, and like today, we're going to actually explain certain things that are happening in the space that are really going to be affecting the future and future projections. But I believe, not as a financial advisor, but in general, when you're making investment decisions, you should have a long-term mindset.
That a long-term mindset in the crypto world is 5 to 10 years.
Yeah.
In the stock world is 10 to 40 years.
Yeah.
Bear that in mind, guys. So we are not financial advisors and do not intend to be perceived or received as financial advisors. However, we are working with several accredited advisors. So if you're unable to, then please contact us immediately so we can refer you to an accredited financial advisor. Okay, cool. So let's go on to the news of what's crack-a-lacking. But first, let's go to crypto bubbles, because this is kind of showing that. Can everyone see my screen, right?
Can everyone see the screen?
Yeah.
Yeah, I can see it. Yeah, it's all good.
Okay, cool. So as we can see, if we look at the crypto bubble, it's fair to say that the market is up. But we are going to come back to this in a second, because this is the crypto market.
Yeah.
Now, from what we've seen, the crypto market tends to react a little bit earlier than the actual stock market. And one of the things we've been saying, and one of the things we've been talking about, is that there is a potential huge dead cat bounce.
Yeah.
What is a dead cat bounce? A dead cat bounce is the idea that when something falls at rapid speed, if it falls from a big enough height, it will bounce up. So this is the potential, and this is also what is known as a bear trap. So this is where the market looks like it's going to go up, gets everyone to invest in it, and then skyrockets down.
Yeah.
So this is something that we've been looking at. I think
one thing I must highlight though is my brethren right here. This is my brethren. Yeah, me and this guy. It's just a very unique blockchain project that I think you guys should have a little peep at. One thing that's great about it is that it's got stocks and crypto, right? They've tokenized stocks, so you can invest in your standard stocks, your Apples, your Amazons, your Teslas, but
What's
have
it
it
called?
matched with the DeFi. It's called DeFi Chain. They're pretty dope, and I like the team, and they're very active on YouTube. And that's one thing that I like. I like to see faces. I like to see people that are active. Check them out. The staking rewards are insane, but no financial advice on that right there. But yeah.
So let's get into the news that's happened this week or in recent times. So first bit of news is this little shocker that I saw. That number 10 is considering 50-year mortgages that could pass down generations. Now, wouldn't that be amazing if they could do that with an NFT contract that stuck to your family forever and you couldn't delete, like a soul-bound token?
Yeah.
It's funny how things line up, eh? Now, this for me, I'm going to open up for debate later on. No, you know what? Let's discuss this now, because this kicked up quite a storm on the on the WhatsApp. I love the comments. Yeah,
BCK.
because I don't know about you, but I love my parents, but I'm not too sure I'd want them to just hand me down their debt on a mortgage. Who said I want to buy a house? I'm all about REITs, baby.
Yes,
So real estate investments trusts. We're going to cover some of them later on today. So I'm going to open it up. Has anybody got any comments or anything to rouse straight with the disgusting, in my opinion? Anybody else got any other opinions on this one? Because I think this is quite a very wow.
It's up to you, John.
Open up your mic if you want to comment on this one.
Hello, it's Matthew.
How's it going, bro?
How's it going? Yeah, really good. It's not surprising, really. I think the government kind of want to own all the houses in the future, so they can dictate to people where they live and all that kind of thing. So
Yeah, man, look what BlackRock's doing, bro. Buying family houses.
yeah, exactly. It's happening. All the rich people are buying land and
and farms.
farmland. So when you can control the land, you can control the people, right? So I feel like this is just to get people to have a mortgage they can't afford, and then the government will be coming in and be like, hey, here you go, we can pay for it for you, or they'll just fuck you over one way or another.
I'm pretty much agreeing with everything you're saying there. I think it's a case of, with this, as we know, financially, people aren't going to be able to retire like they used to be able to, especially now. Whoever takes this bait, you're just not retiring. You're just not, like, at all. Because the one thing that the average person doesn't know how to calculate is the compound effect of interest rates. And the compound effect of interest rates on something that lasts this long is very, very dangerous. Most people don't realize that the compound effect on interest rates of most property means they're paying up to an extra 40% more in some cases for the property that they're purchasing over the long term. So if you add another 5-10 more years to that, it gets very, very dangerous. Now, the area I'm quite concerned on in this is if people default on their mortgages after year 49, what happens in that situation? But that's a bit of that news there. So let's go to another piece of news. Our boy, the biggest sponsor. You know what? So you'll see the comment that I did here, and it's baby shark do 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 do, baby shark do 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 do, because this guy is lining himself up to be the biggest whale and the biggest player in the game, crypto, stocks, whatever it is. So as we've been watching Mr. Sam Bankman-Fried of FTX, not only is he the biggest donor, second biggest donor to the Biden campaign, not only is he doing some crazy stuff behind the scenes, he's now in a position where he could potentially own Robinhood as well as FTX, which is a power play beyond a power play.
Moving on.
So let's see what happens there. Rumor has it that the original crypto dip was actually because of some overselling and some power pushing from this man. But do your own research into that one. other bits of news. So we've got watches, we've got NFT watches, NFT wallets, NFT phones now. Now we're just waiting on Apple to release those damn AR glasses.
Where are the glasses at, bro? It's been so long.
We
Man.
saw the patent for this in 2020.
That
We
snapshot
showed
was ages ago, bro.
that there was a patent for Apple AR glasses 2 years ago. Where are they, Apple? What are you waiting for? Maybe they're waiting for a time when the markets aren't down and people have more disposable income and they actually want to buy them.
Yeah, possibly.
Yeah. So I would
Or
say,
they're waiting for their competitors to see how their glasses do, and then make changes on that.
yeah, I would say, being as we know, Apple have some of the craziest data when it comes to what's happening on people's phones and their bank accounts through Apple Pay and how much money people have got to spend.
And now you can put your passport on your Apple phone.
I would say Apple is a good indicator to say when we are out of the recession or when we've hit the bottom. When those glasses come out, I would say Apple, out of anybody, would know when it's a good time to launch a new product.
Yeah.
Does anyone agree? Anyone disagree with that? Type agree. Type yes if you agree. No if you don't agree with that one. So next bit of news. So obviously that was the HTC phone. So Napster is going to be launching its own token on Algorand. We're going to have an interview with some Algorand developers and some people from Algorand very, very soon. Look out for that episode. And the Napster thing we're going to dive into towards the end of today's episode. So we've had WAGMI. Oh, this is Storm coming through with another amazing post. So WAGMI United and Adidas have teamed up to explore the future of sport for an innovative Web3 partnership. So let's read what Storm's wrote. So WAGMI United, a new brand dedicated to bringing Web3's most innovative ideas and passionate communities to the world of sports, announced a new partnership with Adidas on June 27th, a global leader in the sport and goods industry. The partnership will see two brands team up with WAGMI United's Crawley Town FC for a new NFT collection. Talk about putting Crawley Town on the map. That's crazy. So that's going to be released on July the 6th. And I think this is as a beta test as you can get. If that does well, pretty much wait and see every Adidas sponsor on the planet get a Web3 partnership. Manchester United. So we'll see what happens with that one, especially with the World Cup coming up. So that will enable fans to play a personal role in shaping the future of professional sports teams like never before. So yeah, look out for that one and Crawley Town and what they're up to. Next bit of news. Oh, that's just Dom. Next bit of news. So this is our boy Lucas. Wait, where's the rest of the news?
Scroll up, bro. After Lucas. It's after Lucas. He posted before me. Sorry, guys. This guy beat me to it.
Oh, here it is. Here it is.
Right there.
So we have.
I'm going to share screen as well.
So public companies holding Bitcoin face impairment losses amid market crash. So with over 1 trillion, let's quote that again, 1 trillion wiped off the crypto market this year. Public companies holding Bitcoin could be reporting significant impairment losses for Q2. Yeah. I'm going to set everybody a quick task right now. So everyone's talking about how much money the crypto market has lost.
Yeah.
No one's talking about how much money the stock market's lost.
Oh, hell yeah.
So does someone want to just quickly Google and see how much money the stock market or the S&P 500 is down this year? Somebody do that, because I've seen the answer, and it's a little bit more than the crypto market, but just isn't getting the same press.
Wasn't it like the percentage that it dropped in the last year to date was the highest since 1962? That's what Cathie Wood said.
Well, we've got our own Cathie Woods in the building, right? So, yeah, you heard that. But yeah, again, please, someone go and do that research and type it in the chat.
Now go on to the next one. Let's speak about this for a sec, but I want to share my screen right after and show you guys something.
So a massive fall in Indian crypto exchange volumes.
Okay, now read the comment on that, bro.
Oh, read the comment.
Yeah.
Just come off the comment.
Okay, the comment was that
but large VC capital moving in.
Large VC capital is moving in. Axel, yeah.
Oh, that's like one of the biggest VCs in the world, right?
The biggest VC in the world, right? I've done my research. I know who these guys are. Their website is absolute trash. Yeah. Their website is literally just a landing page, but they literally are moving trillions into the market. Guess what? Mumbai, they've just deployed 650 million for a new fund in Mumbai. Who would have thought it?
So I don't know if they're applying 650 million. Does that mean that crypto and new businesses are dead, or does that mean that maybe people are looking for opportunities to buy things when they're down and out, just like Sam Bankman-Fried,
Right.
looking to buy Robinhood when they're down and out?
I tell you now, this is the point where all the VCs are most active.
They are excited. So last bit of news that I'm going to share again is, I hope this post actually shared, because this is the most important one leading me into the whole thing with Jamie Dimon.
I don't think your one did. Mine.
Oh, yeah,
I
yeah.
did. Okay, perfect.
Okay. Cool. This I shared in the WhatsApp group, but as we lead into what we're about to lead into about the overall market, this last paragraph sums up everything. So let's just understand what the stock market is about. It is about people investing in companies because the company is going to do well. So a company doing well means it is making more profit.
Yeah.
A company making more profit means they have got more revenue.
Yeah.
And in most cases, to get more revenue, you have more customers, right? According to these stats, Oxford Street, which is one of the busiest places in the world for foot traffic, in May 2022 dropped to 761,889, down from 2.4 million in the same month in 2019. So let's do some quick maths. So if the foot traffic of Oxford Street has dropped from 2.4 million in 2019 to 761,809, which is around a 68% drop, what might that affect? Type in chat. Let's see if everyone's been paying attention to past lessons. If foot traffic goes down by 668%, what parts of people's businesses do we expect to see drop? Revenue! Yes.
We love it.
Come on!
We love to see it.
Love to see it. We love to see it. Now, if the revenue is down, what does that mean about their earnings?
It's down, isn't it?
That means their earnings are going to be down. And if their earnings are down, that means most likely the stock is going to go down. So let's have a little look at what Mr. Jamie Dimon had to say. So I'm going to play a little short video. I'm not going to play it all. I'm just going to play like a couple of minutes from it, probably 2 minutes from it. And then I'm going to break down what he's actually saying. So let me know if you can everyone see the screen.
We're able to do 2 minutes. I think we only can do 10 seconds.
Oh, yeah. Cool. Boom. I'm going to stop it right there. So what does he mean? So what he means by that is the recovery that we had, and this is where we now go to the charts. So the recovery that we had, hopefully you see my. Okay, so again.
Hold on, give it a sec.
Is it lagging?
It's not moving.
Yeah, give it a sec, it's lagging.
Okay, let me stop and then go again.
Yeah.
Boom.
He's going to do the deposit onwards.
Okay, so again, as we know, I like to view things on the monthly
Oh, guys,
because
it's not looking
if
good,
you view
guys.
things on the monthly, it gives you a much better, clear direction of what's actually going on. So loads of people are saying we're in an uptrend, or that we might bounce back here. Well, we bounced perfectly off this 75% retracement. So yeah, bounce up is expected here, but the level that we're actually expecting.
AK, can you mute Mike?
That's right, we could do that, bro. Thank you, Matt.
So the level that we're expecting it to actually bounce off is we're expecting it to go up and fool everybody and then come down to either this area here, if we are lucky. And what's very interesting about this area here is we can see that there's actually a really nice support area just here. And there's a giant order block here. Now, if we're lucky, this is where things would come down to. However, if we're not lucky, it's going to come down to about here. Now, let's break this down. What actually happened in the markets? So what actually happened is that the markets dipped in 2020.
It's moving, yeah, you're moving your mouse here.
Yeah, the markets dipped in 2020. Now, normally a recovery from a dip or a crash or recession takes about 12 to 18 months minimum. How long did this recovery take? This recovery to get back up to all-time highs took 149 days. So it was actually the world's quickest recovery of a market crash. And how did this happen? Because the government printed 1/3, is it 1/3 of all money that's in existence? They printed in the space of a month?
Yep.
No, in the couple, no, it wasn't 1 month.
It was a very short.
It was a very short, but it was like 1 quarter.
In 1 quarter.
I think it's like 8 months.
Oh, is
Like,
it 8
yeah.
months? Okay.
60% of all US money was printed in the last 8 months.
Yeah.
Mm.
There you go.
Something like that.
Do the maths. That means that things have gone up way too fast and have gone up. And yes, it was a great time for people for their first time ever into the markets. Well done if you invested and you made some money. Now, yes, the big banks made money, but we also pissed off a lot of bankers because they were like, oh, these guys think they know what they're doing. And on top of that, we helped some of these bankers make more money than they've ever made in their entire careers.
Yeah.
Now, the problem with the big macro cycle is if the big banks make more money than they've ever made and they see it on the screen, they have to take profit. So when the markets go down, what is that? That is people selling. And in the banker's case, that is them taking profit. Now, we've also heard of this thing called a great reset. So a great reset would be to maybe wipe all of the gains that people made previously. So bringing back the price back down to this level here, which would be 2016 prices. That would be a pretty good reset, right?
Hell yeah.
So it would basically mean all the gains that people had made last year and all the gains that people had made up until 2016 would be wiped away, and people that had just started investing, pretty much anyone that invested during lockdown or over the last 2 years would lose absolutely every penny if they hadn't taken profit.
Yeah.
Now, most people that are unaware or don't know how to play this game probably haven't taken profit. So this is the bigger macro view. Now, that's the first bit that Jamie Dimon was talking about, was the fact that there's been more money printed than ever, which means that it's distorting the earnings reports that we're seeing, because it means that when people were on the high street, the amount they were spending wasn't the actual amount they normally spend. So what did that cause? That caused companies to buy more stock than they've ever bought before. But then what happened when things returned to normal and people had their normal wages? What do you do with all that stuff?
And the bills went up.
and then inflation happens, and then the bills go up, and then the cost of goods goes up, and then oil goes up, and it means that the price to ship all these extra goods goes up.
What happens when the price of food is extremely high because there's a shortage in transport and logistics?
And on that food issue, let's talk about this little situation in Russia. So this is another thing that Jamie Dimon decided to speak about, is the situation in Russia means that the oil price spikes. And if the oil price spikes, so let's go and look at oil. This is one of the oil tickers. Yeah, let's look at this. So if the oil price spikes, what is made from oil? Let's think about it. Plastic.
Plastic.
How much of our world is made of plastic? Sure. If in your room and out, you know what? This would be a great experiment. Type 3 in chat if right now around you there is no plastic.
Ooh, that's a.
Can anyone do that?
Ooh, no one can do that. You're on a computer,
No, I
mate.
can't.
You're on a computer.
You can't do that.
So type 3 in chat if in the last month you didn't purchase anything that had no plastic in it.
I had flies
It's
buzzing, bro.
impossible. It's
It's
impossible.
impossible. So if the price of oil goes up, the price of plastic goes up. All packaging, all shipping, everything goes up if oil goes up. So the easiest way of detecting if a recession is coming is if the oil price goes up, because it means that everything goes up in price in a shock that people can't actually handle. So that is the first thing that goes up. Then what that does, because the price of petrol goes up and the price of the shipping goes up and the price of the packaging goes up, that is the first problem in your supply chain. And again, we have to understand business to understand investing. And if your supply chain prices go up, who then has to pay for those costs? The customer.
There you go.
And then if the customer has to pay for these things in a time when the customer doesn't have the money, what does the company have to do? Cut jobs. And then when you cut the jobs, what happens? Now even more people have less money. And then what happens? The cycle just continues and continues and continues. And the only way to combat it is with something called quantitative tightening. Now, this is, again, what Jamie Dimon is saying probably won't work because it's never worked before. And quantitative tightening is basically the area where what the Fed does is they actually increase the interest rates. So they make it harder, but it's like a way of reducing the supply. So we can see these deflationary effects here because wheat has come down. We can see that corn had a bit of a spike, had a slight spike. Now, if anybody remembers, all gaps get filled, right? All gaps get filled. So, and again, remember, this is on the monthly time frame. So this is a gap here waiting to get filled. So what would that suggest where this price is actually going?
Another thing, America ships more blood than maize.
Which is pretty crazy. Now, in regards to the corn and wheat issue, did you know that Russia supplies 1/3 of all wheat? And well, Russia and Ukraine supply 1/3 of all wheat and 1/5 of all corn. So globally. So let's see, is this going to push the prices up of food for staff? And if the price of food for staff goes up, then you've got to cut your staff. So do we see, hopefully everyone's seeing the chain effect that Jamie Dimon is talking about. So that's that one there. So those are the three areas: inflation, quantitative tightening, and good old war causing these problems. So everyone's probably wondering, so how does this affect crypto? Well, if we are expecting this big dip, this is what I've calculated. So let's do it on total one first. So if we go to the monthly, this is what we can see. So green is the areas where I like to buy. Red is my areas where I like to sell on the monthly. And then once I view it on the monthly, that's when I then break it down to the weekly. And that's when I then break it down to the daily. And look at these sell blocks here. So let's go back to the monthly because that gives us a better view. So what are we looking at right now? We are looking at the total. So total free is the entire crypto market, right? Now, at this moment in time, we can see, yes, we are having a bit of a bounce up, but the area that I'm looking at is 388 billion, because this is where the next kind of clear support is. If we go below that, then we can see the entire market lose a 10x in value and come down to around 110, 120 billion. Now, I hope this doesn't happen because a lot of people are going to lose a lot of money. But I also hope to God it does happen, because that's going to mean that altcoins and most cryptos are going to be at such a crazy low price.
Flash sale.
But nobody's going to buy. Because you know why no one will buy? Because everyone will be scared because they would have seen a bigger drop than anyone's ever seen in history before.
I'm going to buy.
Now, let's look at this again, and now we'll look at
Make sure you have some cash for buying
so
them.
on the total free, this is what this looks like. So what is total free? So total free is basically the crypto market excluding Bitcoin and Ethereum. Again, I'm expecting the entire crypto market to go down to 86 billion. But let's look at Bitcoin as a whole. So again, expecting Bitcoin's market cap to go down to here, because you can see there's a really nice support just here. So that would mean that we've only dropped halfway of where we're going. So we've still got another 45% to go at least. And that would take us to around there, and then potentially around here. 80. I doubt we'll get down here again. It would be amazing if we did, but I don't think we will. So what does that mean, and what does that look like in terms of prices? So far, we've been pretty accurate. All the way from here, when we put this warning out in, I think it was October, September, November-ish, we said that we're going to be selling out of Bitcoin and selling out of our alts, and then buying alts here to get this maximum gain. That went well for us and a couple of people that followed along with us. But at the moment, I personally am going to be anything that's I've bought a little bit of here, as you can see, and I'm personally just dollar cost averaging. I'm not completely selling out of everything. I'm dollar cost averaging, because this is one of the best techniques on the planet. It just means that regardless of the price, you just buy. You just buy what you believe in. Now, what are the things that you should believe in? You should believe in things that are actually businesses.
Yeah, that have revenue streams.
That have revenue streams, that have good profits, that have good earnings.
That you can actually read and see and have updates from the team that you can physically see, not no avatar bodies, real people that have real careers that you can backtrace and track and have a look at their history and their past.
Yeah. So if we do go down further, which could happen, I'm expecting around this area here would be nice, around the 11K mark, but it's more likely that we'll get down to the 8K, like 8K-ish mark around here, just here. Now that would be an amazing buy point, but at that point, nobody's going to be buying crypto. And what would that look like on ETH? Let's have a look. On ETH, that would look like a
7K Bitcoin days.
Woo.
Hey.
Around here, around a $400 ETH. Ideally, it would be great if it was around 250 to 274. Those would be the ideal buy points. Now, again, what gives me this confidence? because of something called the VIX. So most people don't even look at the VIX, but the VIX is an inverted version of the stock market. It's basically of the S&P 500. What it does is it basically shows, you just said it.
Parabolic take profit.
It's right every time.
Loan and buy.
So if you want, you might want to screenshot this or watch it back and look at these VIX levels, because it's never
Loan
been
and
wrong.
buy
This is crazy game right here, these VIX levels. Crazy levels of game. So the VIX, when the VIX is up, the market is down.
Yeah.
When the VIX is down, the market is up. So once it goes past these levels here, these all-time high levels, and it's around here, that means there is parabolic levels, and you should definitely be taking profit. So all around here, you'll see me taking profit. When we get above here, this red line, this is normally the times when I'm trying to buy. If we get around this green zone, that's when that's when I'm trying to get a loan and buy everything. I'm trying to sell my kidneys and buy some if it gets around here, but let's see what happens. Now, again, on the macro view,
Buy everything.
on the macro
This
view,
is not financial advice.
obviously it's not financial advice. This is advice to me personally, that if the VIX spikes up here, I am getting a loan and I'm buying anything I can see. So that's me. But yeah, in general with the VIX, again, if the VIX is going up, what does that mean? The markets are coming down. And I don't know about you, even if you don't know anything about technical analysis, but what general direction would we say the VIX is going?
Anyone?
Type in chat, what direction is the VIX going?
I'll jump in on mic.
Let's get some comments.
Let's see. Waiting for them to flood in.
Because I can guarantee you, there's pretty much nobody on the internet showing this uptrend on the VIX. And it is as clear as day. Like, how much more clear do you need to make it?
Up.
Up. So yes, it might come down now, but what are we expecting if the VIX gets to around here, around this 23 mark? We're expecting it to start shooting back up.
Yeah.
And we're expecting it to just follow this trend line until this area here. So the real shitstorm would be in April, March. What normally happens in April, March? Oh yeah, quadruple witching. If you want to know what then you might need to book in some lessons to find out what quadruple witching is and why it seems to happen in April and March. I cannot predict the market.
Oh my God.
I'm not a psychic. I'm not a wizard. But
We
read things.
Yeah.
So I hope that has given some great information to people. So here's some facts from Kathy Woods. Copper and gold are early inflation indicators, inflation and recession indicators. And the markets and the news might not be saying we're in a recession, but I'm telling you this right now. We've been in a recession since
No, they
2000.
announced it. They announced it this week, didn't they?
This week. They announced it this week. Wow, they're a bit late. I would say we've been in a recession since.
But what was the figure that you said the other day, that it has to be 2 quarters worth of?
A recession is only announced when it's 2 quarters in a row that are down, which I think is stupid. I think a recession should be when in 3 months earnings are down and companies aren't making profit or revenue. I think that's a better indicator. Now, this is exactly why crypto is important, and it's exactly why crypto moves first. Because what is the difference between crypto and earnings reports? Anybody type in chat. Anyone can figure this one out. Oh, someone should know this one.
What's the difference between crypto and
Why
earnings?
does crypto go down before the stock market goes down? Why is crypto a good indicator that the stock market is going to go down? Come on, type in chat. I want you to think about it. What can you do with crypto that it allows you to see that you can't see from stocks on a weekly basis, on a daily basis, in real time? Anyone? You can see the transactions and the transaction volume and the revenue in real time. Now, with the stock market, you have to wait until the earnings reports come out.
Yeah.
So everything's just delayed. It's not a real reflection of what's actually happening in the world.
But isn't the volume skewed?
The volume is a bit skewed on most cryptos, but let's not say the volume. Let's say just the revenue of certain crypto projects is available for the public. Now, because people can see that in real time and they can see less people are using it, what happens? People stop investing because it's a bad investment. Whereas with the stock market, you're waiting for 6 months. That's crazy. So that's what I hope that's made sense to people. So next bit, obviously we was talking about a couple of indexes. So I'm gonna give you again some crazy game in this episode.
This one's a mad one today.
So let me just go to this. Let me know if you can see it. So we're gonna go to Napster thing at the end. So this website you might want to check out. It's called FactSet. It shows where the revenue growth is in different areas. And we can see that the revenue growth was crazy high in consumer discretionary. And we can see, and if we go to earnings whispers, we can see what people are predicting on the earnings of most things in the stock market. Headline news in May was that Roblox was down on revenue. Now let's just think about this. If Roblox is down on revenue, bloody hell. Bloody hell, guys. What is going on here? Roblox down on revenue? What, kids aren't playing games no more? No, what that is again another early indicator of people's parents going, nah, Timmy, you're not having that extra £10 to buy that because they ain't got the money. Ain't got that. So, early indicator again. SAP, down again, misses by a penny. Seagate, misses by a penny. Abbott Beats, are they down? No. I don't know, we'll see with them. IBM, let's have a look at them. Johnson & Johnson, missed their earnings. JP Morgan, missed their earnings. Do we see a pattern here, guys? Are we starting to see a pattern? Please tell me we're seeing a pattern. So again, I'm just going to give you some quick game on how you can look at if a company's earnings are going down. I'm going to do the complicated one because I said this is going to be a complicated episode. So all you're going to do, instead of reading the earnings report, you can just literally go to Yahoo Finance. Someone give me a company and we're going to break it down right here, right now, real quick.
Don't pick Tesla because we've done that already.
We do Tesla all the time. We do Coinbase all the time. So type of company in chat. Or someone from our lovely live audience. Nike. Okay, let's go and look at Nike. Realty Income. So let's look at Nike. So all we're going to do to see how Nike is actually doing is we're going to look at the EPS. And the EPS is like the goals per game. This is the earnings per share. So last quarter, they beat it. Quarter 1, 2022, they beat it. Quarter 2, 2022, they beat it. Let's look at the revenue. Okay, they beat it. So if they don't beat this, right? If this green dot isn't above this, what's going to happen? Now, let's just look at what's happened, right? Look at what's happened in the world. Look at what's happened with the foot traffic. Do we think it is very likely that the target for their earnings, which went from 0.8 to 1.2, is going to get hit with a 68% drop in foot traffic on Oxford Street?
Why did it go up so much?
Why did it go up so much? Because maybe there's been a bit of over ordering on stock. Because in comparison to this time last year, what was happening this time last year?
Money printing.
Money printing. People were going crazy, spending crazy amounts everywhere. Have people got that money now?
Oh, so is this
No.
target based on last year's?
Yeah.
Oh.
It's all based on how things do the previous year. So that's Nike. So let's go to another one.
There's a Realty Income.
Yeah. So we'll do Realty Income. So Realty Income is a REIT. It's a property one. So what we'll do here on this is we'll just click on financials and we're going to break it down a little bit more. So again, the key area that we're looking for is the revenue, right? And what's happening with the revenue? We can see year by year it's going up, but we're looking for quarterly. So when we go quarterly, what's happening? We can see it's increasing, and the revenue, that was good. Okay, they pretty much doubled their revenue from last year almost. The cost of revenue was okay, but the key thing we're looking at is profit. So what you want to be able to do is you want to start looking at certain companies and seeing, is their revenue actually going up? Is their profit actually going up? And most importantly, is their net income going up? Because then when we look at some great companies like Tesco,
Oh, I love Tesco. It's my brethren.
which we can see has gone up by 1%, but the revenue, okay, in this case, has gone up slightly.
Tesco.
But is it actually up? Does it deserve to be going up if in 2020 its revenue was 64 billion and at the moment it's 61 billion? I don't know. I don't know. Now, the net income, we can see again. I don't know. You tell me. Is that up or is that down on the previous year? And if we go quarterly, oh, they don't want to show me quarterly anymore. But yeah, that's a quick lesson on what you should be looking for in these earnings reports. I hope everyone's taken extreme value from that. And now I'm just going to close off on my bit because I think I've shared crazy amounts of game there. Yeah. And also FTX are about to buy the debt from BlockFi. It was valued at 3.2 billion. They then failed to raise 1 billion and it is now being sold to FTX for 200 million. What? So, oh my God, going shopping. And then finally, it's been the worst year to date for stocks since 1962. And it's been the worst year to date for bonds since 1788. And that's me done.
On that note, I'm going to share my screen and let's get into a little bit about Napster. Yeah, big up Storm on this research. So yeah, I'm just covering it. So Napster, what is Napster? Napster is a music sharing platform that was founded in 1999. And as you know, it was quite big back in the day. A lot of people sharing their music, similar to like LimeWire. There was a lot of big buzzes around it. But of recent news, they've been acquired by HiveMind and Algorand, which is, I think, very interesting. Reason being is because they're now actually implementing Web3 and blockchain technologies on their platforms. So let me just pull this up real quick. And let's jump into this.
Big up Storm.
Big up Storm. They're coming back with the Web3 style, Napster. So yeah, the original music industry distributor of the Web 1 era is now going Web3. So let's just have a look at some things that they're looking to do and sort of what this will entail. So they're aiming to develop a closer relationship with music and artists, from being a part of an exclusive drop in collaboration with the studios and with your favorite brand. So they're centered around artists and empowering creativity in Web3 and the real world, which I think is very important. Empowered by Web3 integration in secure, open, and carbon negative ecosystems. So Napster aims to bring together all the opportunities of Web3 in a clear and attractive way to the right shareholders to ensure that the IP is treated with the highest levels of security and transparency. So Napster Innovation Foundation, their objectives are basically for wallet and custody support, both personal wallet and institutional custodial support. V1 of the artist studio, and then Napster token utility will be coming out, and also their incentives. They also have a light paper that they're release that will basically sort of entail all of the different things that they're going to be doing. They have third-party integration framework for their tokens utility and third-party content upload.
You missed the big bit. Big
Oh
bit.
my day, bro! They got cross-chain interoperability and bridging of Napster to
Oh,
other
favorite word.
blockchain ecosystems, which is incredibly important. What that means is that they'll be able to deploy on multiple blockchains, allowing them to basically be everywhere. Pretty much.
Gee, that's literally what we say in every consultation.
It's so important.
Yes, we need to be interoperable.
Yeah, fact. So they'll also have their own token treasury, obviously. And initial Napster token treasury, they are contemplating the issuance of 10 billion tokens, a very high supply. The majority of tokens will be provided to the community. Oh, really? Yeah. Oh, okay. One second, give it a sec. We're gonna go back up in a sec. Was it when as I was presenting?
Or that last page?
Is it up?
Yeah.
Triple check when I hit present. Is it up?
Yeah. So
Hold on. Yeah?
Yeah, I
Okay,
can see
good.
it.
Sweet, perfect. Cool. So it's not just another music NFT platform. Music and Web3 is already a busy place. There's loads of startups. What is missing is an established brand name with tangible brand equity and a universal understanding of all aspects of the music industry. So how it works and how it interconnects, and the means to bring desperate threads together to create a meaningful ecosystem which improves and innovates the stakeholders. So the Napster Network, let's have a look into it. Napster is a unique position to bring music makers, fans, and right holders together in one ecosystem, empowering the widespread adoption of Web3. So as established globally already, and as a recognized brand with a proudly disruptive legacy, with existing agreements in place within industry stakeholders. Napster Web 3.0 is backed by the Algorand blockchain and the deep pool of resources from informed and successful Web3 entrepreneurs, creating new ways for fans to more directly support their favorite artists, developing tools and mechanisms to get closer to the music.
just make a quick comment about Algorand.
Hell yeah, go bro.
So go and check out the creator of Algorand. Go and check out who he went to university with. There's a little guy called Gary, what's his name? I think he's the head of the SEC.
Gary Gensler.
Yeah, I think he went to university. I think he went to university. Yeah, he went to university with Gary Gensler, the head of the SEC. And he also speaks, the head of this also speaks at a thing called the World Economic Forum.
Oh, really?
What? Head of Algorand speaks up World Economic Forum.
He
Okay.
mentioned in their paper actually, to be fair.
Oh yeah.
And even though it was independently written, he was one of the writers.
How could you write like your company?
Yeah.
In
Well, it's not far. Well, it'd be pretty good, isn't it? What if you find some investors or users of your platform there? But you do research on that.
push it, he's a real peace positioning.
Right. So they will provide music makers with a fair and equitable way to distribute their music and generate income over and above music streaming, right? So that's collaborative. They'll collaborate with right holders to offer an industry-leading secure ecosystem to leverage their IP and partner with them on Web3 activations with unparalleled transparency. And also they'll be creating value in many different ways. Believing in blockchain technology specifically based, token-based incentives will play a key role to aligning the interest of all stakeholders in the Napster network. The new not-for-profit, non-US entity conducting the initial launch of Napster's network will refer to therein as the Napster's Innovation Foundation, introducing the Napster's token, Napster, the foundation's medium of exchange, which will be integrated throughout the products, tools, and ecosystems partners that constitute to the Napster network. So Napster Innovations will implement a series of systems and incentives, and the Innovations Foundation will publish the conditions to qualify for useful work, but will look to the community to propose votes and approve new Napster incentives to determine the direction of the network itself. So I think from this, there's a lot of very important points that we can definitely look at. And I think that the way that they're angling themselves and also utilizing the community to angle themselves within the space is very important, because the fans are definitely first in the music industry, and a lot of people do it the backwards way. So yeah, I think this is something that's incredible coming in to the music space, and it's a breath of fresh air for music artists, especially seeing that as they're really struggling to earn a lot from streaming and really have to perform and do a lot of shows, etc.
We did say this is going to be the second revolution of NFTs.
Yeah.
First revolution, PFPs. Second revolution, IP rights for music, because it's the easiest thing for creatives and creators to give IP away for that people can actually make money from.
Exactly.
It's very difficult to give away IP rights that can create revenue from other things. So, and traditionally things go imagery, sound, video. That is just the cycle of money flows in the entertainment industry. We see it all the time and time again. It started off with cassettes, they turned into VHSs. We see it with music. They started off as CDs, they then turned into DVDs, and then went into gaming. So that is the kind of evolutionary flow of entertainment. So,
and I believe we started documenting it with Royale, where actually music artists can actually get a percentage of the royalties from music artists like Nas.
Yeah, and you got to think, with music, it's way easier to get royalties and to create a revenue on music than it is. I guess it's easy to do with IP of artwork or a creative if you have big brand identity. So if you're Kanye West or Pharrell or someone that people are going to buy loads of revenue of your merch, then yeah. But music is something that is a lot easier, especially with the likes of TikTok, to create virality. I think with other areas, it's a little bit harder to do that in the entertainment sector. But we're just in time for questions. So let's go to questions. We'll go to people that aren't usually here first, as we do. So let's go to Harry. Please don't disappear. Questions are the best bit. This is where the best game is.
Yeah, great. Well, thanks for that presentation. That was great. But I've got two comments. The first is about the 50-year mortgage.
Oh, yeah. Oh, I'd love to hear your thought on that one.
Yeah, it's interesting because 50 years, you're looking at two generations, okay, of people, human generations. And so it would be parents and grandparents, or parents and children, or more maybe as well. So in effect, in a nutshell, to cut a long story short, we're being impoverished because before people could actually buy a property and pay it within their lifetime or less, 15, 20 years or less. Whereas now, to buy that same property, they'll actually take, what, twice or more almost 3 times longer. So in effect, we're poorer. Now, but we are poorer, the buyers are poorer. But what about who gets the benefit? What about banks, financiers?
That's what they love. That's
Are
what the
they
banks
getting
for.
poorer? No, they're laughing.
Yep. Yeah, I'm glad you can see it, and I'm glad you've got that take, because unfortunately, there is, like, I'm very open about it. I am not that interested at all in buying property, because I just think that the common trait and idea of get property first as your first asset is just dangerous now. Like, we're not in that same world. And I think it's very dangerous to be pinned to, you can't even call it an asset because you don't even own it. Like, the bank owns it. If you default on it, you're in a lot of trouble. And all that time could actually be wasted. And whereas that disposable capital, investing into either businesses in the stock market, trying to find pre-IPO deals, trying to find REITs.
The same money in a REIT.
It's capital that in a world that we have now, people need, and they can't get liquid capital quickly. And the world's just not stable. It's just not, we're just not in that place where people have job security anymore. If we was, then yeah, the property thing's all good. But we're just not. Like, I just can't imagine, and I've seen it so many times where people lose jobs and then they don't have time to think or to breathe to go into the next job because they have this mortgage that they have to pay, that they've been paying for the last 10 years, and they don't want to default on it. And
Exactly.
I just think that's
Exactly.
scary.
But then also, you get a situation like now where with inflation, interest rates are going up.
Yep.
Yeah.
So if you actually got a 50-year mortgage, that's huge. Yeah, exactly.
What's your buying power going to
Say
be
no
like
more.
in
Say no
50
more.
years?
Yeah. So it actually puts an even greater burden. It doesn't actually make things better for buyers, for consumers, on the contrary.
And also, like we said, the compound effect of that interest as well.
It's
Exactly.
crazy. And
Yeah.
I think that's the bit that, if I know this is one area that they do touch on in some schools, they do touch on the compound effect, but I don't think they apply it to real world situations.
I want everyone that's here now to go on a compounding calculator and play around with it and see how much money you guys, well, for me, I do it on the making side, but would lose.
Just died. Put the speaker on your laptop.
I'll do it on mine.
Okay,
But yeah, you said you had another point, Harry.
Yeah, the other one is IP. Intellectual property. I think that's a great thing in terms of blockchain, but I'm a photographer, right? So photographs have always had that kind of curse of copyright, you know, you can get ripped off left, right, and center. But with the blockchain, with producing NFTs, okay, there are side effects, the environment, you know, energy consumption, blah, 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 but that might be remedied in the relatively short term. But you've got copyrights that actually go with the image. And I think this is a great thing. The same goes for other art forms as well, isn't it? For intellectual properties.
I would be very careful with that though, because there is a very common, depending on where you place your NFTs and where you do it.
Yeah.
There's a thing happening at the moment where people aren't actually getting the smart contract. What they're getting is a direction to a link, which that link can then be redirected, or what that link's pointing to can be changed. Whereas you want to make sure that you are involved with NFTs. That, again, if you want to know more details on this, just drop us a message on either our website, our Instagram, or whatever, and we'll be happy to do a session with you just explaining this in a little bit more detail. So yeah, that is one area there where there is a bit of area for concern. with that side. But yeah, great questions. Really appreciate you. Thank you very much.
Thanks for coming down, Harry.
Thank you. Let's go to who don't we normally have? Jermaine. How you doing, broski?
You plugged out, sorry, bro.
Oh, everyone's disappearing. We're getting to a good bit. I hate when people do it.
Yeah, I'm good. How you doing?
I'm good, bro. I'm good. Yourself?
Yeah, I'm good.
Have you enjoyed today's episode?
Yeah, everything's been really good. Especially the quantitative tightening. I was gonna quickly ask though, do you know about the one of the previous Fed central bankers, the Paul Volcker, I think back in like the 70s. And then he raised interest rates higher than inflation back then. I think it got to like I think interest rates got to like 19 or 20% back then. Do you think that could potentially happen over this high inflationary period, or do you think power will just continue to be super dovish and then or potentially just reverse their timing?
19% inflation would be devastating. Like it, but the problem is history does repeat itself, and everyone and all the stuff that I'm looking at is saying that we're going to have a repetition of what happened in the 60s and 70s. And I always encourage people, go and have a look at what the markets look like in the 60s and 70s.
If it's a dead cat bounce, I'm sure.
It wasn't even a dead cat bounce. It was just,
there's a dead cat bounce.
it was like a dead cat being dragged by a truck. That's what the markets look like. So go and have a look at that, and you'll be like, if this repeats, it's gonna be a case of who's got the stomach to hang in long enough. And only those that are dollar cost averaging and getting into assets not based on the price, but because they understand the fundamentals, they understand the business,
and also the amount that they're collecting,
and the amount that is going to be the true winners. Anyone really trying to like, this is a great traders market, but for investors, you need a whole different mindset. Like this is now going to be the next 5-10 years are going to be to expose and tear apart everyone that jumped on the wagon in 2020 and thought that they knew what they were doing, but haven't got a clue about an earnings report or haven't got a clue about EPS or book value or anything like that. And I think those are the things that are going to really stand out. And we had we was quite lucky the other day. We had a conversation with the director of the #1 hedge fund in the world. And we said to him, so what do you think? I was just talking about like how the S&P 500 is like massively overvalued and the FTSE's a piece of crap. And I try and get that in every episode.
The pound sterling has lost 15% value to the dollar between May 2021 and now. So £1 used to buy you $1.40 in May 2021. Now £1 buys you $1.20.
That's crazy. So yeah, the director was like, I was like, oh yeah, it seems like nobody, even bankers, don't read earnings reports or balance sheets. And he was like, balance sheets? Taking the piss. So it kind of gives the mood and the vibe that even the big boys are agreeing that people just they've gone out the window. Like the idea of investing has just gone out the window. Like people are, even the banks are playing casino and roulette, and they're just not doing the reading and not doing the work. And it's like, why? So yeah, in short, do I think we could see 15-20% inflation? Yeah. I'm hoping we don't.
And a lot of countries are getting there.
Yeah, because if you look at, if you're talking about real inflation, I think we're at the 20% already. I never make inflation off the CPI data or any other data because that's not real. Like I like basing it off travel and food prices. So travel's a great one. And with everything that's happening around the world, especially in London, do we expect travel prices to go up with all these strikes eventually, even though they've already gone up? Of course. If oil prices go up even a tiny bit more, if inflation goes up even 2% more, those prices are going to go through the roof, the travel prices. And the same thing with food, like, and drinks. Like, if you just go and look, how much is a can of Rubicon? And how much was it last year?
You know what? The thing for me is the Freddo, bro. I remember I could buy a Freddo for 5p. Why is it £1.50?
Everyone loves it.
Freddo's Freddo's like the classic
Freddo?
inflation indicator, but I try not to use Freddo. I try to use a basket of things, but I don't use
for 1p
the
sweets.
traditional basket.
I used
But
to
yeah,
go to the post office
great
and get
question.
1p sweets, bro.
Let's go, Christine. Good to have you here. Are you there? No answer from Christine. All right, let's go, Cherry.
It's me again, Tiffany. I really need to change that.
No, it's fine.
You asked
You
me
enjoyed
for
today's
very
episode?
specific- Yeah, today was really, really good as usual. I've got some gems to take away. So yeah, it was a really good session.
Brilliant, brilliant. What would you say you learned from today?
What would I say I learned from today? There was a lot actually. It was more than one thing.
It's definitely an episode to go back and watch, rewatch.
Yeah,
There's a few secret gems that I hid in there that if you realize, there's a few Easter eggs in there.
Yeah.
So some paid customers are gonna be upset that I gave them away, but
Yeah, the VIX especially when you was looking at the charts with it, is it the VIX?
yeah.
Yeah, so that was very, very, that was very good.
Good. Have you got any questions or anything you want to ask?
No.
Okay, no worries. Thank you very much, Cherry.
Thank you.
Let's go, Idris. How you doing, buddy?
Yeah, I'm good. Hope you guys are all right. Yeah, phenomenal this week. Yeah, thanks for the insights there. The VIX, as I agree with Cherry, yeah, good information, and also the balance sheet stuff without having to look at the boring balance sheets. You know, that's really good work. Yeah, thanks for that. Thanks
No
for the
worries,
insight.
no worries. Thank you very much. Any questions?
I don't have any questions.
No worries.
Yeah, thanks.
Someone just joining us now. Let's see who else we got. Hi there, Al Siddiq. Thanks for joining us. We're just wrapping up now, actually. But let's get the last question from Matthew.
Hello.
Hello, buddy. Great questions from you, as per usual.
No pressure. So you were mentioning about dead cat bounce. When do you think that it's going to start going back down again, the general market? Or is it started to already?
Earnings season.
Earnings season?
Yeah, which is, let's go to, let me show you when the earnings are. I'm sure you can do it on TradingView. Where is it again? There is a bit on TradingView where you can just bring it up and it shows you all the earnings. It's down here, isn't it?
You drag that thing and then drag it up.
Oh, is it here? Wait, hold up. No, it's one of these. No, it's exchanges. Economic earnings calendar. Here we go. So let me just show you on TradingView now.
Shouts Matthew Mint with one of our NFTs, universally challenged.
Jeez. So on TradingView, it actually gives you a calendar. So you just literally press here and it gives you all the dates for the economic things.
Oh, yeah.
You should be able to click here by country. Okay, earnings calendar. So you can just press this here and you can see on the right hand side the earnings, and then you can see the estimated earnings where they're going to be.
Oh wow, okay, that's amazing.
So we're basically earnings season starts more or less, I'd say, for the big boys around July 8th, around then.
So basically, if they have any bad news saying, oh, we're down, we're not selling as much, then that will affect the market.
Yeah. But what might happen is we might get a bit of fakery, which is going to be, because sometimes things pump even when they've got bad earnings, or dump when they've got good earnings.
Yeah.
So we might get a bit of that happening. So for me, fundamentals first, then technicals, because that's what's telling the truth is the fundamentals. The technicals can be manipulated and sometimes lie.
Yeah.
Yeah.
So that's for me on that one. So yeah, look out for that.
Cool. Thank you for that.
No worries, no worries. I'm gonna send you a personal link to one of my favorite earnings websites that gives you loads of information.
Oh, sweet. Thank you very much.
No worries, broski.
I like the new setup, by the way.
Oh, thanks.
Thank
Okay,
you,
at
bro.
the
This is
back.
the new setup. Thank you, Dom.
Wait, Matthew, why have you never come to our office?
I have
You
many
have
times.
to the office, bro. What are you talking about?
Twice.
Yes.
Was
Twice.
I?
Once.
No, I wasn't there, was
I don't think he was here.
Okay, fair enough.
And then I don't know, Al Sadiq, you joined a bit late, but did you have any questions about anything happening in the market? No.
Gotta get going, guys. I'll see you
No
later.
worries.
Have a good
We're gonna
night.
wrap up here anyway.
All right, bro.
Thank you very much, everybody.
Thank you,
Take
guys.
care.
Bye.
Cheers.